Welcome everyone to the Custom Bootcamp. We're a couple of minutes after 9 o'clock Central, 10 o'clock Eastern. So we're going to get started. A few more people are coming in as they're joining. I wanted to welcome everyone to the Customs Bootcamp. My name is Derek Kyle. I'm a senior associate at Torres Trade Law. Today I'm joined here in DC by Tony Saranchek. Later on in the program, we're going to hear from the managing member of Torres Trade Law, Olga Torres, and I'll be going over the agenda in just a minute. But first, I wanted to go through a little bit about our firm. So if Veronica, you go next slide.
And Derek, I just wanted to also let people know this is Olga Torres. A couple of miscellaneous. We will have time after each session. We have several speakers. We will have time for questions. So feel free to save your questions towards the end of each of the segments. And also, if you want copies of the PowerPoint, we will distribute that after today's webinar. So I know that was one of the questions that we were getting. So that will happen. Yeah, you will also get our contact information is at the end of the slides. So hopefully you find the webinar interactive and helpful to your company. I did see the list that was distributed last night. I saw a lot of universities, so welcome. It's always exciting to have universities join us, especially in a customs bootcamp, because you're so focused on export. So I'm looking forward to getting some of your questions. And Veronica, if you can switch to the next slide, that would be great.
So while we're working on moving to the next slide, I just wanted to give a bit of an update, or not an update, a description of the firm. So obviously this is a customs boot camp. However, this is Torres Trade Law is an international trade and national security firm. So of course we do customs, but in addition to customs, we also do exports and sanctions, economic sanctions. So exports under the Export Administration Regulation. There we go. The International Traffic in Arms regulations. So a variety of export control work, as well as economic sanctions, lately involving Russia to a large degree, but also traditional sanctions program against Iran, Cuba, North Korea, Syria. In addition to the international trade work we do, we're also a national security firm. Primarily, that means foreign investment. So the Committee on Foreign Investment in the United States, foreign investment reviews, as well as foreign ownership control in under the Department of Defense reviews of secured facilities. So in general, international trade and national security. Today we will be focusing on customs. That's why we're all joining, but wanted to get that out of the way and let everyone know about the full range of practice areas we have. Veronica, if you could go to the next slide. So I wanted to go through the agenda. Like Olga mentioned, at the end of each of these sessions, we'll have an opportunity to answer your questions, about 45 to 50 minutes per session, and then we'll have a bit of a break after each one of those. I don't know about you, but sometimes when I'm in one of these half-day or full-day programs and there's not a break for 2 hours, 3 hours, I don't love that, so we didn't want to put you through the same thing. So first of all, in the agenda, we're going to go over, 3 big bucket items within customs: classification, valuation, and country of origin. That's going to be myself and Tony that are going to cover that session. And then at 11 Eastern time, after a 10 or so minute break, we will launch into requests for information and audits. After that, Olga will be presenting at 12 p.m. Eastern, 11 Central on enforcement penalties and disclosing violations. And then lastly, after about an hour break for lunch, we really hope that you'll be able to join us. Our a firm in alliance with us. It's VTZ Abogados. It's a Mexican law firm. They're going to give an update from Mexico and talk about Mexican customs laws, but more importantly for the viewers today, really the interaction with U.S. businesses and Mexican customs law. And I'll give more of an in-depth introduction to VTZ before that presentation, but they're a customs law firm out of Mexico and leaders in the field, and we're very excited to have that presentation afterwards. So hopefully you can stick around for us for that. Veronica, if you go to the next slide, and we'll get started. Okay, so first we're going to start off with classification. I like to give a bit of history first. So you'll see on the slide that the Harmonized Commodity Description and Coding System, what we call the Harmonized System, HS codes, was in development for a long time. It entered into force in 1988, but what I find interesting is several governments got together actually in the late 1960s with the first idea, and then throughout the 70s, you know, when it's one government, these things can take a while. When it's several governments, it's going to take decades, and it did. But finally, in '88, it entered into force. That was followed on in 1989 by the U.S. Joining with the Harmonized Tariff Schedule of the U.S., HTS-US, which is based on that harmonized system that pretty much any country that you'll be dealing with is also using. That's the harmonized name. Like I said here, it's amended every 4 to 6 years. Most recently, it was amended in January 2022. And if we can go on to the next slide. Okay, so the importance of classification. Everything that comes into this country has an HTS-US code. Once again, that's based on the harmonized system. Since the enactment of the Modernization Act back in 1993, there's been a new way that customs is looking at the burden of import classification. So since the Mod Act in 93, everyone associated with the import transaction must use reasonable care. And under reasonable care, there's a couple of ideas that have been developed. One of those being informed compliance. And so the idea is to inform the importing community so that they make correct decisions. And to make correct decisions, they have to use reasonable care. Classification is incredibly important in every import transaction. Primarily from the government standpoint is because it's the basis of duty to be paid. Customs is the second largest revenue generating agency after the IRS, believe it or not. Interestingly, for the majority of the nation's history before the income tax in the early 1900s, customs was the major revenue source for this country. So classification being the basis of duty to be paid is really one of the main reasons why classification is important. The second reason would be statistical reporting to the Census Bureau. And one example of how this comes up that I think of, we've been dealing with lately, a lot of the Section 301 tariffs or China tariffs, some call them Trump tariffs, but that's the 25% additional duty on goods from China. Now we're to the point of, you know, ongoing exclusions to those tariffs. If you've been fortunate enough to get an exclusion from the Section 301 tariffs, we regularly prepare these exclusion requests. And for those of you that are familiar, in preparing those exclusion requests, the U.S. Trade Representative will ask, as part of the public docket form, are these goods available from anywhere else besides China? Well, a great place to find that information is Census Bureau statistics. So they're tracking what's being imported, and they're tracking them based on the HTS classification. So those statistics are one of the other things which classification gets us to. And then finally, rules of origins for free trade agreements. For some of these rules of origin under an FTA, in order to qualify, there may need to be a tariff shift. In order to determine if there's a tariff shift, meaning processing in one country allows the product to undergo a change in the tariff code it had when imported into that third country before being imported into the U.S., you have to know the classification both before and after the processing or potential transformation. So 3 major bucket items that classification forms the basis of. If you go to the next slide, please. So I wanted to show everyone the structure of a classification number. This is a typical HTS code. First 2 numbers cover the chapter, and we'll discuss, where the chapters lie within the actual schedule. Then the heading and the subheading. Those first 6 numbers are going to be harmonized throughout the HS adopting countries. The last 4 numbers are going to be individual to each adopting country. So those will often, but not always, be different in the US as opposed to Europe or Mexico or other countries, those last 4 numbers. And if you go to the next slide, Veronica. So after we talk about what a classification number looks like, we're next looking at what the schedule itself shows. So this is the very beginning of the chapters within the HTS US 0101. And if you look there on the far left is the heading and subheading. So the heading is the first 4 numbers. The subheading is the next 6 or the next 2 numbers after those first 4. As you saw in the previous slide, what's called the tariff rate is the 7th and 8th numbers, although that's not one-to-one with the duty rate. And then finally, the last 2 numbers are what in the HTS US are called the statistical suffix. The difference there is purely for statistical or capturing statistics. As you can see here, that makes sense if you look at this first code 01012100. The difference between 0010 and 0020 is male and female horses. They're going to have the same duty rate, but it is important to capture those statistics. As you're moving along to the right, you'll see the article description. It's a bit interesting in this situation to call a live horse an article, but in this case, that's what it is. And so these will become more complex. Early on in the schedule, these are, one way to put it is the least processed items, right? So live animals are about as little processed as you can get. As you move along in the schedule, these will become more processed. So think, food and meat that's coming in, more processed, though still unprocessed raw materials, base metals. And as you move along, they'll get more and more complex. And therefore, the article description will often get more and more complex. So while this is an easy, straightforward example of horses and cattle, it will get much more wordy in the article description, and it will cover a lot more technical products. And then moving along, the next to the right, you'll see the unit of quantity. All of these are numbers, but that's not always the case. You'll sometimes see kilograms and other units of measurement, and that's an important factor when you're putting in your quantity. There's going to be a difference between if you have 10 items that weigh 100 kilograms, you need to figure out if your unit of quantity is number or kilograms for accurate reporting. Then you get into the rates of duty. So there's 2 rates of duty, 1 and 2. Under 1, the first is general, and you'll see many of these duty rates are free, but then some, as you can see, there is an actual duty of 6.8%, 4.5%. That's the general rate of duty. That is applying to most countries of origin around the world. But then you'll see under one category, there's also special rates of duty. These relate to special trade programs or free trade agreements, and you'll need to check and see if those are applicable. And if so, then there is a special rate of duty. See, in these examples, in both cases, it's free. And then that second class comes up very little lately over the past couple of years. It's more important because that second class involves countries with which the U.S. Does not have normal trade relations. So whereas the one category in general rate of duty is more for most favored nations related to the World Trade Organization. This second class is where we don't have normal trade relations. So Cuba, North Korea typically, but good luck importing from an embargoed country. In these days, Russia. A couple of years ago, Congress suspended normal trade relations with Russia with respect to certain products, and so the duty rates are often higher for these specified products. That's when this second class of duty rate comes up. If you go to the next slide, please. Okay, and so the tariff schedule structure, what you saw an example of was a chapter. That was chapter 1. Before we even get to these chapters, there's a lot of information. There's a table of contents, which is actually very helpful for something with 99 chapters, which the HTS US has. The notes are very important. The general rules of interpretation I'll go over in more detail here in a bit because that involves classification. And then you get into the chapters. There's 21 sections with 97 chapters. The sections are chapters grouped together. So you can have articles of base metals all within one section, but having different chapters for articles of aluminum, articles of iron. And as I discussed before, earlier chapters involve more raw or primary materials. Later chapters are more complex, electronic goods when you get into the 80s and 90s, electronic goods and more technical products. And then the final section, section 22, has chapters 98 and 99, and those are special duty provisions. Those are going to be unique to the United States. That is not what's agreed upon under the harmonized system. So you'll see China, section 301 tariffs there. You also see exclusions from section 301 tariffs. Other particular duty provisions in 98 involving duty-free importation for certain goods, certain medical products, certain articles for the blind, things like that, educational materials. Those are in 98 and 99, and those are based on statute from Congress, sometimes from executive action. Again, those are unique. And then after these sections and chapters, you have annexes and appendices, that can be helpful. I won't cover those in detail because there's a lot to cover today. If you go to the next slide, please. So the classification tools, I mentioned some of these, and we'll cover the important ones in more detail. The GRI, which that forms the basis of how to classify. Then there's indexes that will be helpful, legal notes and explanatory notes. If you can go to the next slide, please. General rules of interpretation. You're probably noticing that this is a packed slide, and that's fair. I wanted to get this information on the slide. We'll send these out later. I won't spend as much time as I could on this slide because the GRIs, they're so important for classification that you can have an entire, 45, 50, 1 hour presentation just on these GRIs and the application of them. But I wanted to have this on the slide, and I'll briefly walk through 1 through 4 are applied in sequential order. So if you're classified under 1, you don't move on to 2A, 2B, 3. 1 is my favorite GRI because it's the most straightforward. If something is described in the heading, in the subheading, and the legal notes point you to that chapter, and there's no question, then you're classified under 1, and you're done. Think of that very first slide that we showed of the HTS US. If it's a live horse, there's not really a lot of question there. So you're under GRI 1 and you're good to go. It starts to get a little bit more difficult under 2. GRI 2 is broken into a couple of sections. So the first one has to do with incomplete and unassembled articles. The classic example here is a bicycle being imported, and you have all the parts. You have the frame, you have the handlebars, you have 2 wheels and tires, but it's not put together. Well, as long as those numbers match up, you have just the 1 frame, the 1 set of handlebars, 2 wheels and tires. That's an unassembled bicycle, but it would be classified as a complete article, the bicycle. That's a very basic but general description of 2A. 2B references mixtures and combinations and how to handle those situations. Usually or often with mixtures and combinations, you get to GRI 3 and how to interpret it. Moving on to 3. 3A is a very helpful general rule of interpretation. So an example of this is if you have two classifications, one for other brushes and one for toothbrush, and you're trying to classify a toothbrush, the more specific heading is going to be toothbrush. So that makes that decision easier. 3B is more difficult and takes some analysis sometimes, and this is used in the context of mixtures, combinations, and sets put up for retail sale. So imagine, a barber kit, right? It's got a comb, a brush, clippers. In a situation like that, if there's several potential classifications, then you classify based on the item that gives it its essential character. For a retail set, obviously that can be quite difficult. Do the clippers in my barber set give me the essential character? Is it the comb? So in sets, it can be more difficult, and there's other GRIs that can help with that. In some situations, it'll be more obvious which part of the mixture, the set, or the combination give the essential character, but absolutely some interpretation involved there. GRI 3C, this one is easy to apply if you're sure you get there, and that's where you use the item later in the HTS. So it's the higher number. If I have something that's 2933 and it's equally applicable to a classification under 4033, then I'm going to go with 4033, but only if you can't classify it under the other GRIs. Quickly through these last ones because the vast majority will be handled under GRIs 1 through 3. 4 is rarely used. Occasionally you'll find a ruling where they get here, but once you're through 3C, it's usually pretty clear. But under GRI 4, that's where you classify under the heading most appropriate for similar goods. In the actual GRI, the language is something like the goods that are most akin to it. Rarely going to use that, so definitely triple check if you're getting into GRI 4. 5 and 6 are very specific. 5 is related to containers, and it's actually lists specific cases like a guitar case, camera case, things of that nature. And those are classified with the article. But again, don't just think because this is a case, it will be classified the same as the article that it's a case for. It's got a very specific list there. GRI 6 involves classification at the subheading level, which is basically going through the GRIs again for the subheading. Next slide, please. That was a quick look through GRIs. Again, I could spend an hour there. There's a lot to unpack, but that's really going to guide classification. The legal notes, these are section, chapter, and subheading notes. Not to spend a lot of time on this because we want to get to valuation. Definitely look through the section and chapter notes when classifying, because some items that seem to be like they would be classified in a particular chapter or section are specifically excluded. And it's really helpful when you get there, but it's easy to misclassify if you ignore these notes. On the other hand, some will be specifically included, which also makes things easier and makes you feel more comfortable with your classification. Next slide, please. Quick note on explanatory notes, a pet peeve of mine. Explanatory notes are very helpful. They are very helpful. They're often used in customs rulings. They're referenced. The issue with explanatory notes, they are published by the World Customs Organization, that same body that created the harmonized system. They are not free. So you either have a subscription service or you can actually buy them. They're updated regularly. They're not free. So you can get by with classifying without the explanatory notes. But as mentioned, CBP, Customs and Border Protection, is using these explanatory notes, despite the fact that they're not legally binding. They're not put out by the U.S. they are useful and persuasive, and you will regularly see reference to the explanatory notes in customs rulings. Next slide, please. Quickly going through some classification tools. As I mentioned, this idea of reasonable care, along with that came the idea of informed compliance. Under informed compliance, Customs has published several really helpful compliance publications. They're all accessible online. They're not all about classification, but many of them are and provide a lot of helpful information there. Next slide, please. Classification rulings. If you've looked at your informed compliance publications, you've gone through your GRIs, you've actually read all the legal notes, and you're in the Harmonized Tariff Schedule. You still don't know and you're concerned about classification of this new product that will be imported, you can apply to Customs for a binding classification ruling. The major note here is this can only be requested with respect to prospective transactions. So items that have not been imported before, because you should know the classification prior to importation. But you can apply for a ruling there. It's got all online at this point, e-rulings. You'll provide lots of information to make it as accurate as possible, and that ruling will be binding. Next slide. And I believe this is the last classification tool. Several other people, hundreds of thousands of rulings have gone through that process I just mentioned of applying for a binding classification ruling. And they're all captured in a database online, again, free database. For those of you, I know there's several attorneys here, it's a bit like case law precedent research, except in my opinion, much more straightforward. Some of these rulings will be several pages, but many are just 1 or 2 pages. That being said, sometimes there's not a ton of reasoning about the classification, but it's a really great feeling where you find a couple of rulings that are very similar to your product, and those are binding rulings from Customs, and you can feel comfortable that you're in the right direction on your classification. Next slide. Quickly going through the misclassification consequences. If you incorrectly classify, that can lead to penalties from Customs. If you continue to misclassify, there's also the risk of being selected for an audit to see, what is wrong with the importer's compliance procedures that continue to lead to these classifications. With the right classification, it can impact your business. If you misclassify, that will also impact your business, especially due to potential penalties and audits. And there's a risk of being delayed at the port or border for misclassifications. I think I've got one more slide. Next, please. Quick tips for compliance. Taking responsibility for your own classifications. Yes, Customs House brokers are very helpful, but they will not be liable for the misclassification. For the most part, that's going to fall on the importer. So give your broker instructions, follow up, make sure everything is being correctly classified in post-entry reviews. Maintain a classification database. Anytime you have a new product, classify it and maintain that so knowledge transfer occurs when people leave the company. That database can be input into your software system. It could also be as simple as an Excel spreadsheet containing all the classifications. So being proactive and taking responsibility for your classification, getting help from professionals if necessary, applying for rulings to Customs if you feel it necessary. All these things will help you remain compliant. And next slide. I'll hand it over to Tony for valuation.
Good morning, everyone. I'm Tony Swanchak. The topics I'll be covering this morning and customs audits, and my experience I'll talk about briefly ties in very nicely with both of those. I started my auditing career with the IRS, doing internal audits there and internal investigations, and then I started with U.S. Customs when I was there during the period that became part of Homeland Security. I did audits of the large national companies and some audits of like small brokers and importers also. So a range of type of audits and also provided technical expertise on investigations. And then I worked for KPMG for a few years, and then also Jones Apparel. So with working with those different entities, I got from the customs end, it gave me like a little bit of perspective from each part, what customs looks for, the role of the consultant, how we can help importers the most, and internally what the perspective is from the compliance effort and risk analysis and the decisions that had to be made that are sometimes driven by the amount of resources. So we'll talk about valuation first here this morning. On the next slide. So Derek talked about classification. That's going to give you in a percentage most times what the duty rate is. You know, the part that ties into that is what is the value to apply that duty rate to. Most times, what the simplest form of valuation for to declare the entered value is where you just have two parties. They're unrelated, a seller and a buyer, and it's just a straightforward purchase of merchandise. That's your basic layer, and then what we're going to talk about is where it starts to get complex. It's when you add circumstances to that you have to be aware and monitor more things. So instead of having two parties, most transactions involve more than that on an international level. That starts to add to the complexity. And you start to add in other transactions that might occur outside the purchase of the transaction that have to be tracked more and monitored. And then if you bring related parties into it, that's a whole level of possible complexities to be aware of and to track. So customs is looking at the value and the classification. Obviously, that drives the revenue calculation. Again, like classification, it requires reasonable care, and we'll talk a little bit more about that. It can get complex, and it ties back to the accounting records, and customs can look at the financial statements and get into the general ledger and working trial balance to try and look for some of these things that relate to the accounting records. The cross rulings there, Derek talked about that a little with classification. It applies to all trade areas, and it's a good tool if you don't know where to start at all on something, on any trade area, whether it's a free trade agreement, classification, maybe there's a quantity issue or something you need to look up. It's a good place to start. Because you could just type in, we'll just pick a CIS that we're going to talk more. You could type that in for your search, and it'll give you each of these rulings talks about the criteria. When customs is responding to it, they'll list out the criteria that they're applying. So it gives you a little bit of background on where to start and what customs is looking for. And there's a lot of different rulings out there. Each one's a little bit different, and doesn't mean that it's going to apply. One company that requested a ruling doesn't mean it's going to apply to others. So over time, you have to read a lot of these different scenarios, and then you build up the experience to see how to apply it to other transactions. Okay, we can move on to the next slide. So these 5 types of valuation called the basis of appraisement. And that comes because the import specialists within customs are defined by the law as the appraisement specialists. And they look to the auditors for assistance a lot of times if it requires getting into the accounting records. These are all defined. We're going to talk about each of these a little more. The important thing here is, I think like 95% of import transactions fall under transaction value. And that's where you want to stay. It's the most straightforward and easiest to support. And all the others, if you have something that excludes you from there, or if you're a related party, it takes a little more work to justify staying in transaction value. And even more work if you have to start moving through these, and you have to go through these in order to see which one's the most appropriate and where you might fall. They all get involved with a little more work and a little more records that tie back to the accounting and tracking your transactions more. Okay, we can go to the next slide. Evaluation, how it's defined, is the price actually paid or payable for the merchandise when sold to the US. So it's meant to be between, again, the simplest form, it's meant to be a transaction between two unrelated parties. That's arm's length. So the seller or the manufacturer, they're looking to recoup all their costs plus a reasonable profit in their industry. That's what it's all built around. And that's the invoice price. And then you have these other items here that can occur outside of the purchase of the merchandise itself that customs also requires that you look at. The two that are can get most complex are assists, because there's several different types of assists. Importers don't always think about that, and it usually doesn't always go right through the customs department. It could just happen through on the logistics side or on the purchasing side. And royalties is another area, licensing fees that can get complex, and is something to be more aware of and watch for. That's something where since COVID, we've seen companies asking for more advice on royalties, because they started out during COVID. They wanted to do more business online and get started importing into the US, and they started out with a simple structure, importing, and then they established a US entity, but it was just only a couple employees, if any employees. And then as you start adding to that, the parent company in whatever country they're in, they want some return on their investment. How do they get that? Part of it's through the sale of the merchandise, but also through royalties and fees. And that's where it starts to get complicated, how you write that agreement and the tracking of it. Okay, next slide. Now, this is definition. We could talk about it all day, and there's thousands of rulings on that. The price paid or payable is the total payment. So by that, customs means not just the payment for the merchandise. Any payments occur before or after the purchase of the merchandise that may relate and be involved with that purchase of the merchandise. So you can exclude the international freight. Customs uses the FOB point, which is the foreign port. So once it's on the vessel, the international transportation and insurance is one thing that can be backed out of the entered value. And direct or indirect, there is two other words to focus on, especially the indirect. That really applies more when you have related parties. Customs through court cases and rulings is going to deem any payment between parties that are related as dutiable until proven otherwise. So someone wrote a check from the US importer to the foreign parent company and didn't specify what that was for, and there was no documentation. Customs is going to consider that part of the merchandise value until the company can show otherwise. The assists, there's several different types of assists. This can get complex. It emphasizes the importance of communication within different departments within an importer and other entities. This could be things that are providing the help manufacture the merchandise. It could be materials, components, or parts, tools, dyes, molds, even engineering and development work, depending where it's undertaken and done. And that has to be tracked. As you see, there's outside the US is a key part of that. If it's done in the US, it can be excluded, but that requires record keeping and being able to locate those records that show where the engineering and development took place. So all these require extra tracking and knowledge of that they're going on to be able to include those in the appropriate way. Value, because some of this can be apportioned, there's different ways to add it in. Let's say an importer is purchasing 1,000 units of something a month and sending it to the manufacturer. Well, let's suppose they get a shipment every quarter of the finished product. There's different ways to include that. You can include it all at once. You can include the whole year, evaluate the system, one entry. So it gets into a lot, not just tracking the dollar amount, how the best way to include that in the entered value when the declarations are made to customs. Okay, we can move on to the next slide. Now, these are some of the things that will exclude the use of transaction value. You have any type of restriction that the manufacturer or the seller is making a condition of being able to buy the merchandise. That could be something that precludes you from using transaction value. If they are going to have requirements, certain areas you can't sell it in the US or anything that relates to reselling it in the US as a transaction, that could be excluded value. Conditions where a value cannot be determined would be that the entered value, that invoice might be an estimate, some type of projection. Of course, other things are going to occur afterwards that the parties know about, that is going to change that price and the total payment for the price paid or payable. And so that would exclude you from transaction value. Related party transactions, that gets complicated because the goal is to stay within transaction value because that's the most straightforward. But there could be a lot of work involved just to, make sure that you meet the additional tests that customs could apply and that you have available the information and documentations to determine that the price was affected by the related party relationship. Okay, we'll move to the next slide. Now, if you are excluded from transaction value for some reason, these are two of the next methods: identical merchandise and similar merchandise. So there you can read the definitions there that they have for each, but then it also gets involved in, if you look at the rulings on this, you have to start tracking when other transactions occurred. Was it similar quantities? It can't be a transaction from 2 years ago. It has to be something more timely and to the entry you're considering making or getting ready to make. So you have to track the quantities and some of the timing of this to make sure that because if it's too low, then the price could have changed during that time and customs may not accept it. Okay, we can move on to the next slide with some of the other methods. Deductive value here is where it's kind of like a build down method that's mentioned in some of the free trade agreements. You're starting with the US, the first domestic resale, and then you're backing out expenses that occurred after the importation and some other things that can be backed out, from these allowable commissions and a profit and some other expenses. So you're working backwards to try to get to what the price was that would have been arm's length at the time of import. And this can get a little tricky. There's actually a part of it that's called the super deductive value. And what that relates to is how far back you're looking for a similar transaction to use. So it can get a little complicated. Again, the quantities come in. Customs is looking for prior imports of similar quantities so that the price would be the same. If you're looking to import 5,000 units of something, and the only transaction you have was 5 units like 6 months ago, that customs might look at that more, and it's going to be harder to support using this deductive value method. Okay, to the next slide. Computed value is something that usually with related parties, and it's like the build-up method that's referred to in the free trade agreement. So this is more like straightforward cost accounting, manufacturing bills of cost of bill of materials. You're looking for all the costs to make a product, all the materials that went in, the labor, the overhead, and there's certain things that have to be included or excluded. And that's where this computed value comes in. And that ties back to being able, again, to have the right information sharing and document sharing between the parties to make sure that can't just have the seller come up with a number. Customs can ask for documentation, dig further all the way back through the accounting records. So they'll most likely start with like a cost of bill of materials, and then they'll say, well, this part here, you know, we want to see that general ledger count, and then they can pick some invoices to see what the prices were on the invoices. So they can trace it all the way back, and it can't get complicated. There's a specific form to use that method. Sometimes it's, you know, it is a little more straightforward than some of the other ones because it's tracking costs, one straightforward cost accounting, than identical, similar, or deducted. And then the fallback, even if you get to the fallback, Customs requires you go through these in order. So you have to do a little bit of analysis under each one to say, this isn't going to work for us, and a little bit of reasoning why. Customs in the rulings I've seen has never questioned the why or the reason to pass over one, but you have to have a little bit of analysis there and you know, a good reason to skip to the next method. The fallback is you're not just going to start with any value and make up something new. Normally what happens is you're going to look at, as you went through all these, you're going to have some values there that are close, or that you could use, but you don't meet all the requirements maybe, or it's too difficult to track. And so you're going to take one of those previous ones and make an adjustment to it. And that's how you're going to get to your entry value. And of course, that adjustment has to be something that can be supported and reasonable, and documentation available that Customs could request. Okay, we can go to the next slide. Now, valuation is all these areas we talked about. Rulings could be, you look up research rulings for any trade area. This risk assessment cycle, kind of an internal control cycle that Customs defines, can be used for valuation in every area. So it requires doing an ongoing, if you haven't done anything, if there's no Customs department and nothing's been done, you've been relying fully on the broker, the first thing to do is a risk assessment. Identify all the departments and personnel involved with importing, figure out what they do, figure out where the risk is for the type of product that you're importing, build the industry and how much the broker has to do related to it. Is it something that's related to the section tariffs? You know, you're going to want to put more effort in to make sure you have that classification right, because that's a more sensitive trade area right now with Customs. And then you're going to want to put procedures in place to make sure that all these are identified. And part of that's going to make sure that the different departments involved communicate on a regular basis, and that you have a contact in the accounting department that's familiar with researching invoices and how to find purchase orders for assists that might occur, and how to put all this value together with the invoice for the purchase of the merchandise and declare the right value. It could require coordination with the brokers. The brokers have experience that they get to see not just what's going on if it's a large broker just for your company as an importer, but they see other issues too with other similar importers in that industry, and they see what's going on with other importers, what notices they get from Customs. So they're a good source of information also, and you have to keep that line of communication open. It can require, in some cases, Customs has very broad authority. We'll talk about that more in the auditing section. And in recent years, for some free trade agreements and things, they've been reaching back further into the seller or the foreign parent's accounting records for invoices, documentation. So, but they'll start with the importers. They could start with the importers' financial statements and general ledger. They're going to look at the general ledger to look that are more likely to have assists. And one thing that people forget about, importers forget about there, is that Customs could ask to see the balance statement, and what they're looking for is the assets, and they're looking for machinery or equipment that may be owned by the US entity. And there's circumstances where that could be loaned out to the foreign manufacturer seller, and that may count as an assist. And that's how customs digs for that and finds it. Transfer pricing, if it's related parties, this trips a lot of people up with what kind of documentation have and how to answer the questions. So the first part there is that US Customs looks at this trade area much more than other countries do. And so they may ask a lot more questions, and if you're a large multinational company with a lot of subsidiaries, you may know what happens in other countries, and then what customs can ask, US Customs can ask for a lot more information and emphasizes this area more. The other part of it that's tricky to communicate and convey internally is that customs has a different perspective in general on looking at it. Most tax departments and accounting are familiar with what the corporate income tax authorities are going to ask for. That's different than what US Customs is going to ask for. Corporate income tax authorities, they're looking at the income statement as a whole to make sure that you're not underreporting the revenue, that you didn't inflate expenses to underreport your revenue and pay less corporate income taxes. Customs is looking for the opposite, or you underreported something, and the value wasn't high enough. So it's some of the questions can be the same in the terminology, but it's different end goals of what each taxing authority is looking for, and different ways to respond to it, the different documentation. And customs can get into what the profit margin and the costs are on a transaction by transaction level. So there's a couple different ways they can look at it. The one that they consider the most objective on the transfer pricing methodology area is the cost plus a profit. So what they'll do is they'll pick an entry and an invoice, and they'll want to see the bill of materials from the manufacturer on that product, and they want to see that all the materials were there, the values for that, the overhead, the labor, and that a reasonable profit was added in. And that can get complicated. It's just because you're related parties doesn't mean that all that information is available. So this is something to vet out and discuss ahead of time if you're related parties. There should be a transfer pricing agreement in place and documented, and you should be able to have access to it and know a little bit what's in it, and have these discussions between the parties ahead of time. What documentation is available at the parent level? What do they want shared between the parties at a documentation standpoint and financial data? Because sometimes they don't want that shared between subsidiaries, and that can create more work and push you out of transaction value. Okay, next slide.
Okay, so we're at 10:55 Eastern Time, 9:55 Central. I did promise you breaks during the agenda.